Thank you for joining us at XM.com for today's market comment by Harlan Bospisuros. I'm Maria Pachurdiz. The US dollar traded lower against all the other major currencies on Thursday, weighed down by the Fed's decision on Wednesday to keep interest rates untouched, while pouring more cold water on expectations of one last hike in this tightening crusade. Fed policymakers struggle to determine whether an economy that continues to fire on all cylinders may need more restraint, but they also appeared uncertain on whether financial conditions are tight enough to bring inflation to heel. Market participants may now lock their gaze on today's US employment report for September. Non-farm payrolls are expected to have notably slowed to 180,000 from 336,000, and the unemployment rate is seen holding steady at 3.8%. Although officials did not close the door to another hike, investors are currently assigning only a 30% probability for that happening by January, and they are penciling in around 75 basis points worth of rate reductions by the end of next year. With the Fed placing extra emphasis on the jobs market and the 10-year Treasury yield dropping more than 20 basis points since Wednesday's decision, a stronger than expected report pointing to elevated wage growth could still prompt investors to lift their implied rate path and reinitiate long positions in the dollar. The pound received a small boost after the Bank of England also held its benchmark rate steady, but reiterated its pledge to keep it high, stressing that they do not expect to start cutting anytime soon. Yet although the British currency finished the day higher against its US counterpart, it was lower against the euro, which suggests that the gains in cable may have been owed more to a weaker dollar than a strong pound. All three of Wall Street's indices rose 1.7% or more, with the S&P 500 adding nearly 2%, recording its biggest daily percentage gain since April and closing back above its 200-day simple moving average. Hopes that the end credits of the Fed's hiking campaign may have already rolled encouraged investors to add to their risk exposure, and this is also evident by the fact that the risk-linked currencies were the main winners against the greenback. Upbeat earnings could also be adding to the bullish mood, as more than 80% of the companies reporting so far have beaten analysts' estimates, with only 15% falling short of expectations. What could now determine whether the rally will continue for a while longer or come to a halt is likely to be the US employment report later today. Thanks for watching today's market comment here at XM.com.